Square can buy it now and pay a lot, or buy it later and pay more. Shares of Square are up this morning after the company announced its second quarter earnings and that it will buy Afterpay, an Australian buy now, pay later, BNPL, player in a $29 billion deal. As TechCrunch reported this morning, Afterpay shareholders will receive 0.375 shares of Square in exchange for their existing equity. Shares of Afterpay are sharply higher after the deal was announced thanks to its implied premium, while shares of Square are up 7% in early morning trading. The exchange explores startups, markets and money. Read it every morning on TechCrunch or get the exchange newsletter every Saturday. Over the past year, we've written extensively about the BNPL market, usually from the perspective of earnings from companies in the space. Afterpay has been a key data source, along with the yet private Klarna and U.S. public BNPL outfit Affirm. Recall that each company has posted strong growth in recent periods, with the United States arising as a prime competitive market. Most recently, consumer hardware and services giant Apple is reportedly preparing a move into the BNPL space. Our read at the time was that any such movement by Cupertino would impact mass-market BNPL players more than niche-focused companies. Apple has a fintech base and broad IRL payment acceptance, making it a potentially strong competitor for BNPL services aimed at consumers. BNPL services targeted at particular industries or niches would likely see less competition from Apple. From that landscape, let's explore the Square-Afterpay deal. We want to know what Afterpay brings to Square in terms of revenue, growth and reach. We also want to do some math on the price Square is willing to pay for the company, and what that might tell us about the value of BNPL and fintech revenues more broadly. Then we'll eyeball the numbers and try to decide if Square is overpaying for Afterpay. What Afterpay brings to Square. As with most major deals these days, Square and Afterpay released an investor presentation detailing their argument in favor of their combination. Let's dig through it. Square is a two-part company. It has a large consumer business via Cash App, and it has a large business division that offers payments tech and other fintech services to corporate customers. Recall that Square is also building out banking services for its business customers and that Cash App also serves some banking and investing functionality for consumers.